Welcome to Stock Watch with me, Ntauleng Lechela, and joining me to unpack your stock-related questions today via Zoom are David Shapiro from Sasfin Wealth and Ricus from PSG Hole-in-One Ruimsig. Be sure to send your questions through via email to stockwatch@vtv.co.za, via SMS on 41392, or on X at Business Day TV using the hashtag StockWatch. Gents, thank you so much for your time this evening, Ricus, even though I butchered your name there, but yeah, we move. Looking at global markets, volatility remains the name of the game as investors keep a close eye on developments playing out in the Gulf region. Today, we did see risk returning to the table as oil eased, following comments from President Donald Trump saying the war will come to an end soon. I mean, you can't trust that man as far as you can throw him. But markets reacting positively. David, what are you making of this?
Well, I'm surprised that we're as firm as we are.
Yeah.
And that the oil price is coming down. There's still, if you listen to him, and I did that, I know it was like midnight in South Africa. I was listening to his press conference and he continued. In fact, he cut it quite short. He was only on for about a half an hour. But I think that this is going to continue for a few more weeks. He made it clear where they're heading. And I think the whole presentation was around assuring the supply of oil through the Straits of Hormuz. You know, one of the big problems is that the insurers are not insuring, the ships going through. Therefore, he's kind of given them insurances. You will be followed. We will have the military supporting you, and you will get through. I think the whole aim to bring down the oil price, and that seems to be working. We're watching oil prices come down. They're still at very high levels, but I think that's really what he was trying to achieve, and we've seen what's happening in markets today.
And are you surprised?
So, until the next presentation, until the next.
I mean, I was watching the Defense Secretary Pete Hegseth saying that today will be the most intense day of American strikes against Iran, and I was so confused because it's like, what do you make of the diverging commentary? Yes, you're seeing markets reacting positively to what Trump has said, but then you hear something like this. I think the UAE foreign minister also warning against these tensions that are playing out, saying that this is a really troubling time. I'm just really surprised at market reaction, Ricus.
Yeah, let's step away from the politics because that's going to drive you crazy. Let's look at the mechanics of the thing. On Friday last week, you had a huge spike in the VIX, in the volatility index. And together with that, the VIX-X, which is the volatility measurement of the VIX. Now, I don't want to get too technical, but what you had was basically, you've almost got to take a look at where the money is flowing. With that kind of spike, and then the uncertainty surrounding that spike, funds had to hedge. And they can do that by, for example, selling securities or buying puts or whatever. If you compare that variance, that the extremes of those two measurements versus what actually happened in the market, it was over elevated. In other words, it was a fear of volatility that wasn't realized in the equity market. 2-3 days from then, where we are sitting right now. Now, I'm not saying that fear or that volatility is not going to be realized, but at the moment it hasn't. Therefore, the markets adjust, and that's more of a mechanical pullback than we are seeing right now. If you rather than what Pete Hegseth is spouting or what Trump is saying or not saying. It is a pure flow of funds matter that we are dealing with at the moment, I think.
And the fear around...
Natalie, what Ricus is saying is that stock markets make sports betting look like a nursery school game of snap.
Oh,
Thanks,
gosh.
David.
I mean, explain that way. Yeah, I understand it a bit more.
More easier.
I think the fear in particular also comes because markets are also pricing in the economic implications that have been widely discussed, of course, inflationary risks and how that feeds into future monetary policy moves, right?
Yeah.
That's if those oil prices remain elevated. But that also depends on how long the war lasts. Ricus, have you started pricing in a delay in rate cuts that could be over in the US and even here at home?
I think, how long the war lasts obviously is a short-term thing. I think the longer-term effect, and Davis just he was talking about that, is the Strait of Hormuz, and specifically not whether there are going to be tankers sunk or not. What's going to happen is people have seen what can happen. You know, Dubai used to be the spot where you go and it's luxury and it's a great vacation or whatever. All of a sudden you realize, hang five, I'm at 150 Ks from a war zone. It is going to affect the insurance rates payable even if the war ends. Those insurance rates aren't going to come back to where they were 2 or 3 weeks ago. That will have an impact because it increases the cost of doing 20% of your oil shipping and whatever sulfur you're exporting and aluminium you're exporting is going to affect that. It should have a knock-on effect to inflation, and obviously that has a knock-on effect to interest rates, where the possibility of lower interest rates has been pushed into the future. So if you're talking about pricing it in, it's your global interest rate environment is not as benign as it was 2-3 weeks ago before what does Trump call it? His escapade started.
Anything to add there, David?
Disclosure, sorry.
And how, until the big story here is affordability. And that's what Trump is very, very worried about. The midterms are going to be fought over the economy, over affordability. And what happens, America is not short of oil. They're net exporters. They've got as much as they want. They can supply, internally. But you pay the world price. You don't pay a demand supply issue. And that if prices are going up around the world, you're going to go to the gas pump here or the petrol pump here and pay the world price. And that happens overnight. So what it does to do is consumers are under pressure. Suddenly they see the price of petrol going up. So they hold back a bit, they hold back on their spending, and so it goes. So it is a very sensitive issue globally. And hence, I think this is why we had the press conference yesterday by Trump. Don't worry, this is going to go, it won't last and so on. Trying to assure consumers. But if you're going and taking your tank there, boy, you're paying high levels. So this is the big issue around the war. And the headlines are around that, not about Pete Hegseth or who's bombing whom. It's all about where oil is, what the cost is, and so on. It's a big issue here.
All right, let's move over to questions then. A lot coming through on where one should hide their money. A viewer's observation here saying they're trying to understand why U.S. healthcare and consumer staples have taken a knock despite being considered as defensive stocks, David.
Well, they're not defensive, if you haven't got the money, you're not going to buy them. And I think that's the issue. If you go through the market, it's they're the ones who are going to be hit. And we saw the job numbers as well. And I promise you, it's a very tough market here. The job market is very tough, even though the absolute numbers seem okay. One anecdotal evidence here. talking to friends, family, people around here, there are layoffs taking place at the moment, and it's not that easy to find a good job. I'm not talking about sweeping the streets or sweeping the snow away, issues like that. I'm talking at about a high level. So, there are a lot of sensitivities in this market. And of course, those are the areas that are going to be the consumer staples.
Yeah.
Even though you need some of it, you're going to hold back on your on spending.
Just your thoughts around the U.S. labor market then, Ricus. I mean, just thinking about the print we got out in January and the print we recently got out, very different. Also tracking what we've been seeing in the ADP figures. Some would say that it looks like the labor market is somewhat stabilizing.
Yeah, it depends whether you take a look at the Bureau of Labor and whether you trust their statistics. And everybody's now concentrating on ADP.
Yeah.
There's a huge concern about the validity of any of these measurements, partly as a result of Trump's firing of the head of BLS, who remains, and how much they are willing to fudge numbers in order to please him. Government shutdown didn't help either, where we've got a lack of data, and that raises concerns about the validity of the data. So that's the one thing. I think on a more macro level, as far as labor is concerned, and I think it's possibly a real concern. The United States lost their blue-collar workforce to China over the past number of decades. With what's happening with AI, there's a fear, and I'm not going to say it's going to happen, but there's a fear that taking a look at layoffs in white-collar workers, the services sector, because of AI, they're going to lose that part as well. So it's no wonder that there's, even if it might not reflect in the numbers, but that there's a general pessimism in the American workforce, which at the moment is largely driven by white-collar workforce.
Yeah.
And I'm not talking about the super rich, which doesn't really matter. I'm talking about, middle-income guys.
All right, let's bring it back home. We got the GDP figures today, with growth up 1.1% over in 2025. Momentum seems to be picking up, but coming short of Treasury's 1.4% target. I want to bring in the banks at this point, right? We are seeing a number of the big banks looking outside of South Africa for growth, and that seems to be starting to pay off for ABSA, with its rest of Africa regions really boosting its performance over the full year period. Just your thoughts around those numbers that we got out today then, Ricus.
Yeah, it's that's where they are making their money, because their interest income wasn't spectacular if you consider their balance sheets. So I think it was possibly a little bit disappointing. I mean, ABSA is still a turnaround situation, but their cost increase, I think, was higher than expected. Their interest income not as good as expected. So it's the business banking side of things that's pulling them ahead, and I don't think that's what people want to see when they look at ABSA. They want ABSA to be meaner and leaner and better at executing. And looking at today's results, I don't think that was quite up to expectations.
Did it meet your expectations or disappointing on your front, David?
Yeah, if you split it, as Ricus says, it's you're importing most of the growth from Africa. The local operations are up reasonably okay, but I mean the growth that headline is mainly from offshore, and it's outside of Africa outside of South Africa is a third of their business now. And I focus on what's happening inside, as we were talking. We're talking about overall growth in the economy, and you can still see a lot of strain. You can see it coming through in the retailers. Now it's coming through in the bank. A lot has to be done at the bottom end of the market, or in the spending side, and that presents the governor with a massive issue. what does he do with the oil price now
Exactly.
where it is? Inflation now starting to go up. Do you start to reduce rates? Do you help the economy, or do you cater to the financial markets and try to keep inflation under control and the rand steady and so on? So, in fact, I think it's globally. I think there's the same thing with Powell here as well on the employment side versus inflation. So it is it's a juggling act. It's a very difficult issue to make. But I think bottom line is our economy is still bumbling along. It's still struggling.
Just sticking with banks for a bit then, Ricus, maybe we can get a sense of what you've been making of the bank's earnings season so far. Nedbank and Absa do seem like they're in some sort of a transitional phase with Absa, getting a new CEO and sort of rejigging their focus. Over at Nedbank, we did see some disposals as well as acquisitions. FirstRand, in the meantime, seems to be faring well, but they still have the issue over in the UK.
They still have the issue in the UK, and that's possibly the only thing holding me back from saying, "Yay, go for FirstRand." They have made provisions, but with I'm probably being overcautious, but until we know what the amount is, I don't, it's an either or for me, and I don't want to sit in an either or. I want to have some kind of conviction. I have to base that on some data, not merely guesswork. But from an operational side, FirstRand was doing what I wish Absa and Nedbank could do as far as earnings growth is concerned through the whole spectrum of their operations.
Now, from banks to fintechs, a question here, David. What is the best fintech to invest in on the JSE or overseas at present? What do you think about Weaver Fintech and this subsector, or should I keep nibbling at the very expensive Capitec?
I like Capitec. I was going to say the best fintech is Capitec, but it's not necessarily a fintech. How to define fintech? It's such a wide definition now. You can look at Pepkor. Pepkor is a fintech company. Or it's got a big area of its market, which is fintech. And I think these are the biggest challenges to the banks, are the fintech companies, but they're mainly satisfying consumers. The point I wanted to bring in just on banks, and this is the difficulty, is that do banks drive the economy, or does the economy drive the banks? In other words, poor economy, don't lend money. And that's most of the large banks. They don't want to lend money. It's very, very difficult to extract any kind of loan out of them because they want their numbers to look good. On the other hand, you can't grow the economy without credit. Without opening up. And I think that's a dilemma that we find ourselves in. So the banks are in very good shape, but the economy is not doing that well. So what's going to break first in that? But I must say the fintech companies are exposing and doing incredibly well because they are tapping into a market. I just looked at Weaver.
Yes.
And Weaver's numbers, which is, what's it, buy now, pay later. Buy now, pay later. That's like you used to put down a deposit for a pair of shoes, and you come in each month and give a little bit, and then after 3 months you get your shoes. That was very good in President's. When we were brought up around the stock exchange, there were a number of companies or outfitters there that used to put laydowns.
Laybys.
Laybys, yeah. So, but their results are great.
Yeah.
The results are phenomenal. It just shows you what kind of demand there is and how it does stimulate consumption and that. So I think the banks have got to do it at a higher level. When are they going to break ranks? When are they going to start lending a little more aggressively? We're not seeing that.
Yeah.
As Ricus pointed out with Absa.
Yeah. And, David mentioning there that the best fintech player is Capitec, and we have seen it, picking up some of those smaller fintech players over the past year or so. But maybe let's zoom in on that sector in greater detail. And if you have a preferred pick there, you can share it with us, the likes of a Weaver Fintech, Ricus. There's also Capital Appreciation. I think it's rebranded now, Araxi, if I'm not mistaken. And
Yeah,
Lusaka Technologies.
yeah. Interesting, interesting. Small little local company. Their software side of the business struggling for various reasons, but as far as their machines are concerned, in other words, the little payment machine that you use if you go and um, shop at a small
Tap and
shop, and
go.
there's a little handout card scanner, and the infrastructure at the back of that is doing very well, gaining market share, and it has been doing well for a while. But offshore, I also had a stock pick a month or so ago, and that's Newhold, which is the Brazilian version of Capitec
Ah,
without the bricks and
yes,
mortar.
yes.
I think that's also and and not American for a change. And yeah, I think that's worth a look as well.
All right, before we get to your stock picks, perhaps let's look at some of the property counters that were out with results today. High prop Attack, those numbers look good. Attack has upgraded its full year earnings outlook and expects its guidance growth, or rather distributable income per share growth of between 11 and 14%. In the meantime, High prop has upped its dividend payout ratio to about 82%. Your thoughts around those numbers that we got out earlier today, Ricus?
Yeah, Hyprops, nice. Their revisions were up, which is great. They've brought debt down, which is never a bad thing. And obviously comfortable enough to up their dividend payout for their future growth. Although I must say, footfall in Eastern Europe was down, and if I'm not mistaken, so was their locals. So they have to watch out for that. Attack, their revisions were down. They've got a huge exposure as far as their development is concerned on the waterfall project, but apart from that, pretty stable as far as their existing properties are concerned. So I thought both were decent.
All right, let's get your stock picks then. David, where do you see value at the moment?
You should have warned me to get a stock pick, but to be honest,
Like, this is something that doesn't happen every time.
no, it doesn't happen. In this kind of market, it's always difficult. But I think if I was forced to go, I'm still very pro the US market. It just, for me, it seems, well, the US economy, out of all the issues, just seems very resilient. And I'm just looking at some of the Mag 7, they're still very cheap. And I don't know whether you picked up what happened in Tencent today, the release of this open claw agent. You saw they were up about 10% and that. And why I like that, it just shows you how sensitive AI is, or the AI companies are to to technology developments and so on. I still think for me it's a big theme. It's a big theme when all of this is over and the bombs stop dropping. I'm happy to go back, and I think my best proxy is the S&P 500.
Okay.
I'm still very happy to be there. Yeah.
What about you, Ricus?
No, David said everything about my stock pick already. It's Capitec. And I was looking at, and well, one of the main reasons is Capitec's price about 10 or 12% down as a result of everything that's happened over the past couple of days. So yeah, they're limited downside, and all of a sudden you can pick up what is normally quite an expensive share for about 10% cheaper. That being said, whatever's happening in the Strait of Hormuz hasn't got a direct influence on Capitec's business. And as Dave said, it's not merely lending anymore. I mean, they've had a 40% growth in VAS and in their insurance side of business, and also in the Capitec Connect. That's where the revenue is coming from. And their impairments are looking okay. Earnings on that side is looking okay. So yeah, it's what's normally an expensive share, a little bit cheaper, and specifically compared to the things like ABSA and Nedbank. This is, if I want to go into a bank, you're getting one for, as I've said, 10% cheaper than it was 3 or 4 days ago.
All right, gents, thank you so much for your time and joining us this evening. Now that's all for Stockwatch today. Thanks to my guests, David Shapiro from Sasfin Wealth and Ricus from PSG Hole-in-One Ruimsig. Up next, it's The Close.